Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. The death toll from coronavirus crosses the 1,000 mark. More than 42,000 people have been affected so far across the globe. Jaguar Land Rover warns of supply chain disruptions outside China in wake of the coronavirus. The US leaves India and China out of its developing nations list, implying that it can start investigations into what may construe as unfair subsidies hurting US companies. Counting begins in Delhi as Aam Aadmi Party seeks to stay in power for the third time. And Coal India will be amongst the only nifty companies to come out with their numbers today. Well, let's take a look at the trade setup for the day. The world markets and the US markets, led mainly by what Amazon did, went up. So we kind of shrugged off the fears across and moved higher. Look at that. NASDAQ up 1.13%, S&P 500 0.73%, and almost $2,150 a piece for Amazon, the stock, and that led the markets to yet another up move in the session yesterday. In fact, part of it is percolating onto Asia. You could say in a mixed way because Nikkei is still in the red, but I think the Asian markets are, in a manner of speaking, shrugging off the fears of coronavirus. They are up one day, down the next, so you can't really call this a trend, but at least there is some bit of green on the screen when it comes to the Asian screen. The thing is, this green is much needed because if you just look at the premium that the Asian markets enjoy to the US markets, they have never been this cheap relative to the US stocks. So that chart which shows what the premium range is, and look at how it's just shrunk to its record lows in the last 1 week as well. So Asian markets badly need to bounce back for the sake of the money in those markets, but clearly coronavirus impact keeping them at bay. Just that this morning they're starting off okay. The SGX Nifty too, as a result of that, looks like starting off about 0.5%, nearly 0.5% higher. Let's wait and watch if this is indeed the start that we get, and do we then chug along ahead with that. Frankly, it seems that it will be a range-bound market. There is no reason to believe that there will be a trending move either direction. I mean, I doubt that people who are going short as well have the conviction that they can keep on piling on the short positions. So in all probability, range-bound. And I per se don't think that the Delhi election verdict, either way, whichever way it turns out, is going to have a big impact on the equity markets either. We'll have a really detailed discussion on the importance of the Delhi elections in a bit, but just purely from a market's perspective, may not move the needle too much. I think all focus would be, aside of course results, on the China supply chain led stocks, which are likely to remain volatile. Yesterday we saw a bunch of specialty chemical companies doing well. A lot of other companies and a lot of other sectors wherein the supply chains or the end supply or demand comes in from China would likely remain volatile. You could never know when it might just spring up a surprise, as specialty chemicals and select chemical companies did yesterday, both on the upside and on the downside. So this is the pocket that I would watch out for. As our headline stated, Coal India is the only nifty company to come out with numbers today. A few other important ones include a Siemens, Astral Poly, which is of course doing very well of late, and 3M India, which also has done exceptionally well. And let's see if this one has some upsides to itself. It's not a very liquid stock, but an important set of numbers. However, the stocks that I would watch out for, and since I mentioned that how the coronavirus supply chain led stocks are likely to remain volatile or in focus, the con calls of each of these managements says that there is no impact of the coronavirus led issues in Q4 at least for each of these. So Blue Star, Dixon and Amber, all of them have stated emphatically that their operations do not get impacted, at least as far as Q4 goes, because of coronavirus. So let's wait and watch what happens to these names. Chalet Hotels, the numbers came out and the numbers looked reasonably impressive, especially on the bottom line, wherein the net profit was up about 2.3 times. The key thing is, if you just look at what the rental and the commercial segment revenue did, that was up about 2.2 times, and you can figure out where the gains came in. So good numbers. Let's see if the stock reacts. Phoenix Mills, again, the results were above estimates. Revenues were up 16%, and net profit up about 30-odd%. But I think they cost controlled very well because the electricity expenses and construction costs were lower and aided the bottom line numbers. And the number on your screen, the residential segment revenues, which are up about 2.4 times, also aided the numbers. So do watch out for Phoenix Mills in the session today. It's very close to new highs. Maybe it does more. Nalco, the numbers were below estimates. You would want to watch out for this one as well. A net loss of 34 crores versus a profit clocked in the corresponding quarter last year may react negatively. Do watch out for Capex Infra, a small order received but could be interesting. And Camlin Fine, which is saying that they are awaiting clearance from the Chinese government to restart manufacturing. Guessing the operations would have gotten impacted, which is why the stock was down 10%. However, let's tell you what's lined up on First Word today. As counting kicks off, Mr. Sanjay Pugalia joins in to tell us why the stakes are so high in Delhi. Rosalind Chin gives us an update on the coronavirus as Hong Kong starts implementing quarantine for affected people. Navneet then joins in to explain why exchanges need to now adjust REC's F&O contracts and an eye on some of the others. And then Yash ends First Word with telling us why almost all specialty chemical makers are ramping up investments. Countdown has begun for all 70 seats in the Delhi Assembly. The stakes could not get higher for the BJP, which led Home Minister Amit Shah and Prime Minister Narendra Modi lead the campaigns. Meanwhile, Arvind Kejriwal and the Aam Aadmi Party are hoping to hold on to the state, playing on what the party described as development plank. All exit polls suggest that Kejriwal will remain the chief minister. But like they say, the outcome is not decided till the counting for the last vote is done. Or these days, perhaps till the government has been sworn in. Joining us now to tell us why Delhi is so crucial for the BJP is Mr. Sanjay Pugalia, editorial director at Quintel and Media. Mr. Pugalia, thanks so much for joining in. Good morning to you. What's your sense about the importance that this election verdict could have on the political landscape?
Look, I always maintain that Delhi is a glorified municipal corporation, or call it a half state. So I'm still really puzzled that why BJP made it so high stake election. Maybe because BJP is out of power since last 22 years in Delhi. Plus, they have this obsession that they have to win every election, which is very legitimate passion to have. But the kind of effort they made is one thing. The kind of narrative they came with, they made it a referendum on Citizen Amendment Act, on NPR, on 370, on many other issues which are kind of ultra polarizing tools that they play with. They have made it a referendum, and this outcome will reflect on that, whether Delhi voter has listened to them or he has gone with Arvind Kejriwal, who only spoke about, and it was very hard work to keep the narrative where he wanted to be, which was his work about Bijli, Pani, Sadak, Aspatal.
Mr. Pugalia, it almost seems to be a given if the exit polls are to be believed that the vote has swung in, or rather remain in the camp of the Aam Aadmi Party. What does that tell us about, with the presumption that is going to be the likely outcome? What does that tell us about the strategies of the parties? I mean, would a lot of people now urge the BJP to get back to the plank with which it won the 2014 national elections?
Yeah, but as you rightly said in the beginning that till the last vote is counted and a government is formed, nothing is certain in the new kind of Indian politics that we see. Having said that, yeah, there is a unanimity in all exit polls, and if that is the outcome, which is a decent to handsome or to thumping victory for AAP, that would mean that BJP will have to really think about a course correction, because it is not only isolated Delhi with 7 Lok Sabha seats or a small assembly of 70 members. It is about losing Jharkhand, not getting opportunity to govern Maharashtra, and being able to form a coalition government in Haryana with great difficulty. So it will be a commentary in overall sense for the entire country. And just before Lok Sabha election, BJP lost Madhya Pradesh, Rajasthan, Chhattisgarh. So questions will be raised within the party. I don't know to what extent, because there is a complete control over party mechanism, and I don't know what kind of disagreement or dissent can emerge in the party, because it is a typical high command culture. But the demand for course correction will get amplified. And I'm sure because these people are also very smart and agile with their strategy, and they keep changing their tactics and strategy both. For example, BJP defeat in Delhi will make Nitish Kumar very happy, because BJP that wants to be a senior partner in Bihar, it won't be possible. Now they can't bargain with Nitish Kumar. They will have to listen to Nitish Kumar. Otherwise, Nitish Kumar may say that, okay, I'm walking out and I will either fight separately or form a new alliance, even though he has burnt all possible bridges with Congress or RJD. So BJP will be under various kind of pressure. They will have to revisit their talk about development, but on the ground only polarize kind of politics. They will have to rethink on that, and they will also have to rethink about their relationship with alliance partners. More than that, the big question will be thrown up after this verdict of Delhi. Is SC, ST and OBC strongly with the BJP? And I will end this answer by saying this: will BJP not be defeated by Hindu voters of Delhi? So actually, if Arvind Kejriwal wins very handsomely, it will mean that Hindu voters have not voted. And which are these Hindu voters? Largely they will form OBC, SC, ST categories.
Wow, so there are more repercussions than one when it comes to these elections. Just of these elections, Mr. Pugalia, one final question. Yesterday, the BJP has issued the 3-line whip in both the Lok Sabha and the Rajya Sabha, and there's a lot of speculation, I presume, in the National Capital Region about what could happen in the final day today. Any thoughts on the act and any guesses that you may have? Because I think most people are refraining from guessing what could come about or what legislation could be introduced today.
Complex. Generally, on a lighter vein, if BJP had the sense that they are winning Delhi, they would not have brought a new distraction today, because they would have dominated all the television screen for a day or two. But since there is a whip, I believe this will be a very important legislation. Now, will it be a distraction on the other side, or on the distraction of some more polarization by using some more new ideas? I really don't want to speculate, because it is just few hours away from now. But definitely this is going to be a distraction. This is going to be a big thing. Is it going to be a polarizing idea, or they may very swiftly react on the SC observation, SC order on Uttarakhand matter on reservation in promotion? And nobody, especially no ally from Bihar, is going to accept that. And BJP could be very swift in responding to that situation and really surprising everyone. But this is highly speculative. I really have no idea.
Yeah, maybe we should, as you said, maybe just wait. It's just a few hours away, but it promises to be an interesting political day today. Mr. Pugalia, I'm sure you have your hands full. I'll watch out for your...
Bringing whip. Yeah. Bringing whip only tells you one thing.
No, please carry on.
Bringing whip tells only one thing, that BJP is not hoping happy or surprise outcome after the exit poll from Delhi verdict. Otherwise, they would not have brought this important legislative agenda today in Rajya Sabha.
Reading between the lines. Mr. Pugalia, I'll watch out for your Twitter handle as well today. But thanks so much for joining us early morning and giving us your thoughts. All right, that's Sanjay Pugalia, and talking about the Delhi elections as important from a political perspective, even though, yes, it's not as big as it's made out to be right now. But from a market's perspective, as I said, I personally don't think that this will really move the needle too much. We'll probably be dancing more to global tunes, and that remains the most important thing. But moving on to some interesting developments that have happened. Now, the last 2 or 3 days, we've seen companies come out with large dividends. REC, for example, declared a 11 rupee per share dividend earlier this month. As the dividend comes up to more than 5% of the market price, exchanges now need to make an adjustment in the FNO market. Now, Navneet is standing by to explain these changes. And these need not be it, Navneet, because REC is one. There could be others which could come out. The ones like Symphony without being in FNO don't get impacted, yes. But the ones in FNO, interesting changes here.
That's right, Neeraj. In fact, the typical dividend trade that traders play is buy in cash and short in futures. But if you're not aware of this rule, you may land up making losses. So what happened with regard to REC? Of course, there are adjustments today to be made because today is also the X day. I'll just take you a little back. They declared dividend of about 11 rupees on 4th of February. Now, as per exchange rules, if the dividend is more than 5% of the previous day closing price, the adjustment has to be made in the futures and options contract as well. So 11 rupees and 5% of market price was 6.8. So 11 rupees is definitely higher than that. So tomorrow is the date when the dividend will be given. And so today is the X date where the adjustments are to be made. How do you make the adjustments then? In the futures contract, basically, there is no change in lot sizes, but you will definitely see the adjustment of the dividend price. So dividend is about 11 rupees. So yesterday's February futures closed at about 154.2. Today, the opening price of that will be 154.2 minus 11, which is 143. That doesn't mean that you're making any losses. Remember, exchange is not going to make any adjustment with regard to buyers and sellers. It just automatically gets adjusted like the way you see in cash market. Corporate actions are being adjusted. What happens in the option side then? All your strike prices, let's say if your strike price of REC of 100, that will also adjust a dividend price of 11. So 100 minus 11. So all your new strike prices will be minus the dividend price of 11. So typically, Neeraj, if a trader takes a bet on these, and I'm sure you were telling me that the futures are, trading at par with the spot price, and this was the reason. Otherwise, we tend to see futures trading at a discount at least till the X date of the dividend declared.
Okay, so REC is one, and you've given that example. What other stocks, Navneet, would be in focus? Because as we saw, I mean, to the best of my memory, Symphony was the other one, not in F&O, but came out with a very large dividend. What other stocks would be in focus or are in focus?
Well, typically, these are all the PSUs which have higher dividend yield. Yesterday, we had results of GAIL also coming by. And if you look at the dividend, they also declared it was more than 5%. And I just want to highlight the futures of GAIL yesterday were trading at a discount. But after the dividend was declared, as you can see, the adjustment, how futures started trading at a mild premium, but the price converged with the spot price. So yesterday, the spot was down about 1%, but you did see the futures going up by as much as 1.7%, and that was a result of dividend declared. Yesterday, they declared dividend of 6.4, and the previous day closing was about 1.3. So 5% of market price is 6.1. So once again, it's more than 5%. And interestingly, Neeraj, we keep talking about Coal India, how that's a bigger dividend play. So today, the numbers come out. Coal India has a history of declaring 10% dividend as well. So they've had dividend yield. I think back in 2014, the rule used to be the adjustment in F&O contracts will be only if the dividend is more than 10%. Now, Coal India futures have been trading at a discount for the longest time. Look at that yesterday, just ahead of numbers. You had the spot falling by about 3%, but nothing happened to the futures. So futures price, which was trading at a discount, they converged with the spot price, indicating that the street is expecting dividend, which is higher than 5%. Now, if I calculate with yesterday's closing, I think street is expecting dividend to be anywhere between 8.9 rupees per share or larger than that. I think this is a big one to track today.
Okay, we'll watch out for these. And viewers, very important to understand this rule, the small change that has happened and why the futures may or may not move as per what you anticipate because of these conditions. Navneet, thanks so much for putting that into perspective. Well, so one is what's happening in the F&O space. Two, as we said, supply chains and what happens to them, as well as specific sectors. Now, death toll because of the coronavirus, the death toll from the virus outbreak crossed the mark of 1,000 people, with the mortality rate in China estimated at 1%. Meanwhile, Hong Kong has started implementing quarantine for affected people as well. Rosalind Chin of Bloomberg joins us right now with the latest. Rosalind, are there any signs of the outbreak peaking out? What are health officials saying? What else are you gathering?
Yes, well, we did actually in Hong Kong just have a press briefing from Carrie Lam, the chief executive here. There have been more cases in Hong Kong, so we are seeing, of course, the number of cases still increasing, although the rate of increase does seem to be slowing a little bit. And as you mentioned, there is the death toll has now passed that 1,000 mark threshold. It is the death toll globally, at least, is at 1,018. 2 of those deaths outside of China. The rest, of course, mostly in the province of Hubei, which is where Wuhan is based. But we've also got 43,098 globally confirmed cases. The number of cases around the world does also seem to be increasing. Those people who are on cruise ships where they've been affected, of course, are particularly worried, as there has been a cruise ship in Japan where the numbers of those with coronavirus is increasing almost daily there because of the close surroundings that they're in. So here in Hong Kong, we did have 2 cases here because there were 2 people in a block of public apartments that were found to have confirmed cases, and they've now actually evacuated that block of apartments on a precautionary measure, according to authorities here. So there is still a heightened level of alert. Carrie Lam, in her press conference, actually did say she urged once again for people to lower or to avoid social contact, to avoid passing on this illness if you are one to be carrying it. Now, you did mention the mortality rate. This is a new study that has been released by Imperial College in London, saying that if they account for the more severe cases as well as for the milder cases, then perhaps the mortality rate will be actually closer to 1%. And that, of course, would be a lot less worrying, than the current number, which is actually still not that high compared to some of the other severe illnesses that have emerged in the previous years. For example, SARS, which was a much higher percentage of fatalities. Actually, coronavirus is something like 2% or less than 2%, and it could fall further to about 1%, according to this new study. In places like China, there are some factories going back to work, though, even though there has been a shutdown. Some automakers, for example, are reopening their plants. So we have had the likes of Ford and Tesla reopening some of their plants in China. Other automakers taking a more gradual approach. For example, Mitsubishi slowly reopening some of its different facilities around the country, perhaps by February the 17th, and also some of the others like Hyundai, which have closed their factories outside of China, starting to return because they had a part shortage. They are starting to return back to opening some of their facilities as well. Finally, we've also recently, in the last 15 minutes or so, heard from Singapore saying that they're expecting their tourism to take a hit of about 25 to 30% in terms of tourists visiting Singapore this year. Now, Singapore gets about 20% of its visitors from China, so that, of course, would be a very big hit for them, and, of course, we could see further along the line it impacting, of course, the economic growth for the nation overall for the year. And that is a similar situation that many Asian countries here, including Singapore, including Hong Kong and China, will be looking at. Back to you.
Unfortunate as it is. Rosalind, thanks so much for giving us the latest updates on the coronavirus. So, 1,000 mark crossed and economies will take a hit. The good part, or the small silver lining, is that some of the companies are getting back, even if it's on the outskirts, but are getting back to starting to resume part production. And let's see if that picks up. And as we said, it's very important from a supply chain perspective. Well, a sector that gets impacted in a big way is the next one that we're talking about, which is the Indian specialty chemical makers. But we're not talking about coronavirus, we're talking about something else, because these Indian specialty chemical makers seem to be a rather rare breed right now. 4 of them, or actually more than 4 of them, are investing in adding capacity at a time when the most promoters are dragging their feet on new investments in India Inc. Yash Upadhyay is here to tell us why. It's not just 4, right? Yash, and the clutch of these specialty chemical companies are expanding capacity. Why is it that they are doing?
So we've seen that most of these companies have seen a strong growth over the last 5 years, and it seems that they are preparing for the next leg of growth going forward. And while we are just using the example of these 4 companies, these are in a way representations of the sectors to which these specialty chemical companies cater to. Starting first with Aarti Industries, and they have almost a Capex target of closer to around 1,000 to 1,200 crore rupees, followed by SRF, which could overshoot their mark of 800 crores for FY20, along with Deepak Nitrite and Fine Organics, who will be combined looking to invest higher than 600 crores in this year. Where will this money be going in? For Aarti Industries, they are looking to expand their specialty chemical complex, as well as setting up of a new acid reconcentration plant, along with several other projects that they already have in the store. For SRF, a large chunk of their expansion is mostly in the packaging and films business, so they they're coming up with an integrated PTFE plant as well as a new BOPP plant in Thailand. But in their recent con call post their Q3 numbers, they said that they are increasing their capex in the specialty chemical side as well. Deepak Nitrite, a large chunk of it is going towards expansion as well as the debottlenecking projects. And Fine Organics, they are coming up with 2 new 10,000 million tons per annum facilities. One would be exclusive for the food additives business, and the other one is in joint venture with their partner Adcotex. Now, why are we seeing these companies expand their capacities? And there are 3 main reasons over here. First, well, the clampdown in China, that has seen most of the business coming through to the Indian companies. So over the last few years, we've seen that the Chinese authorities have been getting stricter and stricter with respect to their environmental norms. And as a result of this, there's a CRISIL report that says that nearly 50 to 55 companies have had to shut down or relocate their plants. And as a result of this and the increased compliance costs, most of the foreign or the international clients, they have had to take a new route, and the Indian companies have able to come in and fill that gap. Not just that, there has been growing demand in India itself. There is a JM Financial note that says that over FY18 to FY25, the demand for specialty chemicals is seen growing at a compounded annual growth rate of 10 to 15%, and large chunk of that is seen coming in from the agrochemical, pharma as well as the home care products. One of the examples of the strong domestic demand is take the example of Deepak Nitrite. So they have recently come up with their Deepak Phenolics plant, which was set up, which was commissioned in November. And before this plant came up, only 20% of the phenol demand in India was met domestically, while 80% had to be imported. With this plant coming in, it has not only been able to generate cater to the strong demand in the domestic market, but it has also acted as an import substitution, because now it is able to meet most of the domestic requirement for phenol, and has also saved in terms of forex for the government. Next up is why are we seeing these companies expand their capacity? We've established that there is strong demand both in the international market as well as the domestic market, but most of these companies in their latest conference call have mentioned that they are operating at near optimum level. Take for example Aarti Industries, which is the largest chlorobenzene player, and they said in their con call that their facilities are operating at 90% plus capacity utilization levels. Similar is the case when it comes to Fine Organics as well as Deepak Nitrite. So most of these companies, they are already operating at full capacity. And lastly, one sector which has largely benefited from the government incentive is this one, because the thrust on Make in India as well as the imposition of levies and duties on chemical companies abroad, which had been dumping their chemicals in the Indian markets, that has managed to safeguard this industry and keep it on the track for growth going forward. I mentioned about the strong growth over the last 5 years, and take a look at their sales, EBITDA and net profit growth over the last 5-year period, and on a compounded annual basis, we've seen these companies report strong growth. Their top line has been in mid to high teens, their EBITDA has been in 20% plus range, and their net profit in fact has been higher than that. It has been 30% plus in the last 5-year period. Return ratios too have been extremely healthy. Both the ROE and the ROCs have been upwards of 20%. One name that really stands out over here is that of Fine Organics. Both in terms of the return ratios as well as the financials, it has been a rank outperformer. It is one of the largest producers globally as well of oleo-based chemical additives, and it has been doing extremely well. And while these companies on a like-to-like basis are not comparable, and we are not just comparing these 4 companies within themselves, but as a sub-segment within the whole specialty chemical space, what one thing is common across all of these is that they have given extremely good returns to investors, and this is over the 1-year period that we've seen all of these companies gain more than 50 to 60%. Aarti Industries did come off a little bit after their Q1 earnings, when they said that they would not be able to meet the upper end of their guidance, but still it is sitting at gains of closer to around 30%, which is substantially higher than what we've seen most of the other sectors do.
Okay, well, let's watch out. Usually Capex and plans announced after high capacity utilization in a spate of high demand means that the return the turnover of the plant, or the return on the investment done on a plant, is much faster, and that is something that markets typically like. So maybe the markets would like this as well. Yash, thanks so much for putting that into perspective. That's all that we have on First Word today, though, but lots more lined up on Indian Open. You are Bhatt of Latin Capital Advisors Johnson to talk about whether he would take any bets in the current market scenario wherein there is global volatility. We get a sense of the extent of recovery in rural India from Ramesh Iyer of Mahindra & Mahindra Financial Services. But after this break, a full tilt towards the day's trade.